All right, guys, thank you so much for joining us today. Today I have with me Brad McMullen from Prime Lending, and we're going to be talking today about creative financing. And Brad is going to be telling you a little bit more about what creative financing means or different types of financing. We're going to explain why we're doing this type of a video and who it benefits. Brad, if you could tell us a little bit about yourself.
Yeah, hi, Denise. Thanks for having me. So my name is Brad McMullen. I work for Prime Lending. My job title is VP of Renovation and Construction Lending for Prime Lending. So basically, what does that mean? I'm basically in charge of all renovation and construction activities for business development across all 50 states for Prime Lending. Little background on myself: I'm a past originator of renovation and construction loans. I obviously don't originate any longer because now I help loan originators and realtors and builders and contractors and all the above learn more about what renovation lending is and how it could become a benefit. A little bit about me. So basically, I'm about anything renovation lending.
Okay. Um, what type of people do you would possibly be looking at renovation type loans? A lot of people, is it from minor work to major work? What type of people really come to you for renovations?
Yeah, so it's kind of funny. I mean, you might hear me say this word a couple times throughout this interview is myths. A lot of people think about myths when they think about renovation lending. But the great thing about renovation lending is it's not only good for required repairs. What do I mean by required repairs? Somebody is trying to purchase a property and it has a bad roof or no HVAC system or broken windows. That's what I call required repairs. What a required repair is something an appraiser will call out that needs to be repaired prior to closing or prior to a loan being given on the said home. So borrower can't purchase it.
Okay.
Other options are desired repairs. Desired repair means somebody's looking at a property and it'll pass appraisal, but let's just say it's got really ugly carpet and a green kitchen that they want ripped out and put a new kitchen in. That would be
Gotcha.
what we call a desired repair.
Hmm.
The beautiful thing about renovation lending is they're good for both types of repairs, either desired or required. And here's the great thing about renovation lending: all repairs are always completed after closing. So most people don't understand that's how it works. Repairs do not have to be done before closing. So regardless of the condition of the property, we can close and have all repairs completed after closing. And we take all those repairs and roll those into one loan that they can put on a fixed rate up to 30 years. And the loan is based off the after improved value. So I just
So
do a lot at you there,
yeah,
Denise. Sorry.
so Brad, with the repairs being done after closing, how do you determine the cost of the repairs? I mean, can you just have some, uncle come and say, hey, this is how much I think the repairs are going to be? Or does it have to be a licensed contractor that comes in to, give you an itemized worksheet or something that says, hey, this is, these are the repairs, this is how much it's going to be? How do you get that cost?
Yep. So let's say somebody has found a property they like that either has either desired or required repairs.
Mhm.
We would want them to go get an estimate from a contractor, a licensed individual.
Okay.
Basically, what we're looking for is whatever is required by the state, city, or local municipality. That's what we
Mhm.
require. What does that mean? If they don't require a license, we don't either. But if it does, we do. Why do I say that? Is because a lot of states have different rules. But we want a detailed estimate from a contractor. How many estimates do I require? I only require one. Now,
Okay.
do I suggest a borrower only get one estimate on repairs? No. I always suggest get more than one
Mhm.
to make sure that what you're asking for is beneficial and priced accordingly based off of other estimates. Just gives them a better idea. But yes, getting an estimate is number one first step. Once we know that they're qualified to be able to purchase said property, get an estimate for what said repairs can be completed.
Okay. Brad, let's kind of backtrack here for just a moment. In today's market, you and I kind of had a discussion about this. In today's market, we understand that it's a very competitive market right about now. Whereas not always does the cost of living, allow those who are working really, really hard to be able to afford a turnkey ready or a model home that they may see, and sometimes you have to be creative, but they still want the American dream to be a homeowner. And we, I think, the reason why this is so important to discuss this type of loan is to allowing future buyers to think outside of the box. So if you can't necessarily or not able to get that turnkey home right now, something that has everything that you have, these types of loans are probably better to maybe make the home into something that you want to make it into. So Brad, tell us a little bit about the different types of renovation loans that you guys offer.
Yes, we offer 15 different renovation escrow programs, basically for your FHA clients, your conventional clients, or USDA clients. So 15 different options. That's good and bad. I mean, I hate to say it, but it is. It's good and bad. It's good because we've got 15 different options, but it's bad because we have 15 different options. So for a person to look for a property that they might want, we have an option that will fit and will help pick out which one of the 15 is basically best suited for them. To go back to something else that you had said a minute ago, the beautiful thing is most people have no idea that they can buy a property in a certain condition. So let's just say the property that's in a certain condition might be priced lesser because of the condition that it's in. Well, by the time you add in the lesser price that's being asked for, and then you layer in the renovation cost, it might not still be up to what they qualify for, which is good. So I think probably one thing that I always like to get across to people is don't ignore that property that maybe a realtor will list and market saying TLC,
Right.
bring your hammer,
Right.
investor special,
Right.
sold as is.
Mm-hmm.
Here's another good one, cash only.
Mm-hmm.
Everything that I just said right there, those are fine to say, but what I always suggest is after saying that, put or ask me about renovation lending.
Right. Right.
Because all of those property types that I just listed can be turned into renovation loans, but they're being sold at a lesser price because of the current condition of the property. So to go back to what you said, people can buy properties and make them turnkey.
Mm-hmm.
That's what renovation lending is. We can buy a property that needs some either desired or required repairs, make it what they want, post close, and then go from there.
Right. That's good. Um, how are the renovation costs paid? Are they paid out in increments? Does the buyer receive a lump sum after closing to get all of the repairs done? How is it paid out after
Yeah.
closing?
So let's just say that we have a loan amount, a purchase price of say $200,000. Let's make this easy on me. We have a $200,000 purchase price that the buyer and seller have agreed upon. And we've got an estimate for say $50,000 in total repairs that they want to do to the property. New floors, new doors, new trim, new kitchen, everything $50,000, all rolled in together. We close on the loan. Their down payment will be based off that 250. Okay. We'll take that $50,000 estimate after closing and we'll move it to my draw department. My draw department will then pay the contractor directly post-close once the repairs have been completed. We'll never pay the borrower directly because that's considered cash out. We won't do that. We'll pay the contractor after the work's been completed, once it's been inspected off by someone, and once the buyer has signed off on said repairs as well. So buyer's got to sign off,
Mhm.
contractor signs off. We send an inspector out to the property to make sure everything is basically that the buyer and seller signed off on is okay. And then we will release money directly to the contractor.
Okay.
And all of this is happening post-close from my company, from Dallas corporate office.
I don't know if I lost you there. Were we kind of glitching there a bit, Brad?
It's okay. As long as you could hear me, I could, you stop for me, but you're fine.
Okay, I did get a little notice here saying that my connection was unstable once again. So hopefully we can, get through this.
Yeah.
Um, so so we were talking about how the funds are paid out. Um, I think you probably already answered this in telling as far as what things people can get renovated. Is it just to repair the home, or can they use this type of money to maybe, someone who's moving into a home and maybe need new things for the home, a refrigerator, a dishwasher,
Yeah.
maybe want to build a deck on the back of their home. They don't have that. Even maybe install a pool or something like that in the home. Can these type loans be, you know can they go towards this type of thing as well?
Yeah, so they vary along the 15 different loans. Obviously, some of them will allow less, some of them will allow more. I will tell you that every one of my loans can always take care of required repairs. Any type of required repair is needed is always good. Some of the loans will allow a borrower to do anything that they want to the property. And when I mean anything, Denise, foundation problems, new siding, new windows, new gutter, new soffit, new roof, new floors, doors, trim, new kitchen, new appliances, new HVAC, new electrical systems, new plumbing systems, fences, do a brand new garage, either attached to the dwelling or not attached to the dwelling. The interesting thing about renovation lending is real simple. How many times does a person go into a property and say, this property is exactly what I'm looking for if?
Right.
If what?
Hmm.
Okay, so let's just say that the dad's got a bunch of toys and he wants to put a brand new 3-stall garage in the backyard, and that this property would be perfect if it had a 3-stall garage for all of this guy's toys. And great, we can add a 3-stall garage in the backyard. Obviously, value has to cover the purchase price plus that new garage, but that's all things where renovation lending is great because it can take a problem and change it, to make it not what a what if to let's do it.
Right. So as long as they don't max out what they qualify for, if they qualify for 225,000, if they found a home that was 215 that needed some things, then they could use the rest of what they qualify for, correct? To use it to go towards those minor things that they probably would need or want in that home, correct?
Absolutely. And I mean, you have to have the value to cover whatever said repairs you're doing, but we'll help with that on our end by laying it out. This purchase price, what repairs, you need to have an after improved value of X, and then you can do all that. The crazy thing about renovation lending is, and a lot of people don't know this, again, it's another myth. You're taking the purchase price plus all those renovation costs and you're rolling together into one loan.
Hmm.
And then it's going to be financed through 30 years on a fixed rate. So you can imagine, Denise, how much money that's saving them on a monthly basis. Because here's the kicker: people are doing repairs to their property. How are they paying for them?
Hmm.
The majority of people are paying using a credit card,
Right.
right? So higher rate, interest is killer. You just throw it into the one loan, and you can have it all done. Have it all done, move on, all rolled into one loan.
Right. What are some of the fees that are associated with these types of loans?
Yeah. So standard fees for my loans is real simple. So again, Denise, it depends on which loan you're using. The fee amount will go up as the repair amount goes up, which makes sense. Obviously, higher repair amounts, more draw inspections. Therefore, we have to send the inspector out to the property more often. But to answer your ultimate question, the fees, you're using standard loan fees with all of my loans plus one fee. This one fee can vary between $250 to $900. Obviously, small loan repair amounts is very low. That's the 250. Basically, what that is just for a final inspection. The $900 is for 5 draws to be completed to the said property. So just one single extra fee from either 250 to 900, depending on repair amounts and loan type.
Now, as far as down payments are concerned, do they differ from your traditional loan versus a renovation loan? And this is a two-part question.
Yeah.
What does it, the qualification for a traditional loan is one, where, you're looking at the credit score, the DTI, debt to income ratio, for a traditional loan. FHA, you're looking at 3.5% down. How does that differ with a renovation loan?
So the credit portion of qualifying, I will say the easiest way, there's a couple nuances, but nothing crazy, not even enough for me to even bring it up.
Okay.
The credit piece is credit's credit. So credit score, all that is pretty much the same across the board. The down payment, you still have the same. For example, you mentioned FHA 3.5%. The conventional borrower is either 3% if they're a first-time home buyer or 5% if they're not. So that's all the same. So those down payments are all the same. The only difference is in my example of a $200,000 purchase price, on a standard loan, you'd have, for example, FHA, you'd have 3.5% of the 200,000. So if they're doing $50,000 worth of repairs, you'd have 3.5% of the 250. That's the only difference, really. Still the same 3.5%. So same down payment requirements is just going to be higher, which is not that big of a deal because 3.5% of that, you're still rolling it in, and they're getting that property that they want, that they might not have got because, like you said earlier, it's a tight and tough market right now.
All right. Okay. Now, can the borrower do their own repairs? Are there some repairs that they can do?
We call this self-help. We frown upon self-help. I don't bat away from my opinion on self-help. I try to stay away from it. I will look at different situations to where we will allow if it's very minor, Denise. It needs to be minor.
What do you consider minor, Brad?
And painting, demolition. Somebody wants to demolish steps off the back of a deck and put them back on. Anything basically that you look at that does not require a license to do, or a permit, things of this nature. The number one thing is painting. Painting is a big one, and cleanup is another big one. Like basements, the appraiser goes in and says this whole basement's nasty. It's got to be cleaned out, and there's going to be a lot of things of this nature.
How about flooring?
Like flooring, we'll look at flooring as well. It just varies depending on the city, state, and local municipality. Some cities and states won't allow a borrower to do it. You got to have a license and a permit to do it. But where you live, they're a little more lenient than, say, New York, for example. New York's a little different animal.
Gotcha. We won't go into that one.
Yeah, exactly.
So Brad, tell me a little bit about how this overall process works. The loan process, appraisal process, how does this process work? What can a buyer or borrower expect?
Yeah, so it's just like a standard process. I mean, that's the other thing that a lot of people look at and go, it's the renovation loan, it's tough. Or it may be what people have heard of like a 203K loan. We offer 203K loans, but this is the first time I've said 203K. It's because it's only 2 of my 15 loans I offer.
Right, which is a repair loan for those who don't understand what our 203K.
Yeah, it's just an FHA repair loan. Will allow an FHA client to have repairs completed post-close, which is fine. But how does the process look? Well, it works like any other process. We need all the credit docs, W-2s, pay stubs, bank statements, all of that. Next thing I need is a detailed estimate. The quicker I get a detailed estimate, on what repairs that they want to do or require to do, the better. They get that, they bring that back. We have a contractor packet that we will give the client. The client can have the contractor fill it out, give it back to us. We get the contractor registered. It takes 48 to 72 hours, not that big of a deal for a contractor to be registered. Once that's back, we take that detailed estimate, we give that detailed estimate to the appraiser with the purchase contract that you've helped the borrower and seller agree upon. So we take the detailed estimate for $50,000, the $200,000 purchase contract, we put them together, we send it over to the appraiser. Appraiser goes out to the property, appraises the property subject to, not as is, subject to all of that $50,000 that's going to be completed. The appraiser will appraise it as if all those repairs have already been completed.
Awesome.
Appraiser gives us back the appraisal, value's enough, we make sure the numbers are good, you go to closing. So really for my loans, they're just like a standard loan other than the detailed estimate and the contractor docs. Now, I'm going to be honest, those are two pieces that can be tough to get. I'm not dumb. They can be tough to get because of borrowers have to decide on what they want to do, and they got to get a contractor to give it to them.
Right.
So those are challenges with the loan, which I totally understand, but that's why I say it out loud. Those are the two pieces. You get those two pieces just like a standard loan.
There are so many different types of contractors. You know, we use that term loosely, but what type of contractors should they be looking at if they have several different items that they want done in the house?
Yeah, so we will allow, depending, again, sorry, Denise, but depending on which loan, we will allow multiple contractors per loan.
Okay.
So let's just say that they want to have somebody to do the kitchen and the floors. Okay, so that's one contractor. And they've got another contractor that is going to do the roof and siding. Okay, there's two. So there's two big items, and they want to have one more that they want to do a brand new HVAC system. So that's no problem. We can get 3 different contractors. Or Denise, what a lot of people will do is instead of getting 3 contractors, they'll just get 1 general contractor.
Right.
And we'll get the 1 general contractor registered, and the 1 general contractor will pay the 3.
Okay.
That's what a lot of people will do. But in a lot of markets, there's not GCs. So more rural markets won't have GCs. They'll have the 3, which is fine. We'll do either way, just depending on what the borrower wants to do.
Brad, this was good. Do you have anything else to add? I think I'm kind of coming down to the end of my questions.
No, I'm good to go. I just appreciate the time. You know, you know how to get me. You've got people with Prime Lending will help you, and I help them.
Yeah. Brad, thank you so much for agreeing to do this and educate everyone today about the different types of loan. And I wish you well. Stay safe, okay?
Okay, thank you. Bye-bye.
All right, bye-bye.